Hello and welcome back. Hope you're good, doing well. So we are having fat rate decision today, and dollar is struggling simply ahead of that decision. So dollar was pricing in nicely ahead of that rate decision, but today dollar started to struggle ahead of that fat rate decision. So if I'm gonna look at the calendar, so calendar says that Fed is going to raise the interest rate with another 25 basis point today. All right. And if I'm gonna look at the dollar, before going to look at the dollar, let's just look at a couple of more charts first, so that we can understand that why today event is going to be important for the dollar for longer term. So first of all, as usual, so I use the inflation chart. All right, so so I'm gonna put the inflation chart on. So this is the US inflation rate. So that's the headline inflation. So if I'm gonna put the Fed fund rates on it, or US INTR, there you got the US INTR. So there we can see that. So we have already seen that in the previous video analysis, that chart. All right. So the inflation rate and the Fed fund rate. So there we can see that the Fed inflation peaked. If I'm gonna pull out, cross lines. So there, and if I'm gonna put another cross line here, okay, and if I'm gonna put cross line here and one here, so we can see there that inflation bottomed on 1st May 2020. Fed cut the interest rate aggressively and printed a lot of money, and that cheap money brought inflation aggressively. All right, that cheap money brought inflation, and Fed held the interest rate, close to zero for longer term. I mean, for almost 2 years. All right, that's quite a period of time. So almost 2 years, they held interest rates to zero. And once inflation peaked over there, right? So once inflation peaked over there at 9.10, right, or 9.12, then Fed started to catch up the inflation move. Right, they started to raise the interest rate very, very aggressively, went after the inflation, and once they started to raise the interest rate, inflation peaked and started to fall aggressively. All right, and now Fed, is looking to raise the interest rate today with another 25 basis point. Okay, and after raising with another 25 basis point, they may hold interest rate over there. As I have explained that in the previous video analysis as well. So very much similar like that. So they held the rates at zero, almost 2 years. Okay, how long they gonna hold the interest rate at higher levels? Yeah, so time will tell. The inflation trend will tell us that how long they're gonna hold that before we're gonna start cutting the rates, right? So if inflation keeps falling very, very aggressively, that will force them to start cutting the rates so aggressively, the way they raise the interest rate so aggressively. All right. So if you understand that, then if you understand this, these two charts, the inflation chart and the interest rate chart, these two charts are telling us that Fed hiking cycle is about to end. Maybe today going to be the last Fed hike. All right, last interest rate hike today, and not further hike in September meeting. And there is also a chance that Fed may surprise by not raising the interest rate today. They may surprise. Whatever they're going to do, if they're going to raise or if they're not going to raise, it's going to be dovish. All right, so everyone knows that the inflation is falling, rates are peaking, and the hiking cycle is ending. So no more strength on dollar. Dollar was gaining because of that interest rate hiking cycle. You only can expect from dollar, interest rate to drop from that top, which is, a bearish for the dollar. If I'm gonna put a pull my DXY chart on it, let's see. All right, so DXY chart, let me change that color. So DXY chart has also started to fall. We can see that the DXY found its top just after the inflation. Yes, a couple of months later. So if I'm gonna pull out another cross line there we can see that. So the dollar found its top over there after June, July, August, 3 months. So after 3 months, dollar found its top over there and falling, just going after the inflation, so falling. So I hope you understand this logic, all right? And we should not expect dollar to go back up simply. All right, so inflation is going down, rates peaking, all right, and dollar is trending lower. So dollar, so after today, FOMC or during the FOMC rate decision, you are simply looking dollar to resume its trend for more downside. That's the point. Okay, so if I'm gonna go to the dollar index now, so this might be a longer term sell-off on the dollar. Longer term sell-off. When I see a longer term sell-off, this might be something like that kind of drop has just begun on the dollar from that top. Okay, as I have explained that in the previous video analysis, we may see a longer term drop on the dollar, cyclical drop on the dollar might have just begun, all right, after forming higher high over there at that high. Okay, so in the previous video analysis, we were expecting dollar to pull back, to push up, to go higher. All right, so if I'm gonna look at this chart, right, so we were expecting it to go down. The trend nicely started to go down, and in the previous, we were expecting either it to break down or go back up. All right, we got a breakdown over there, and then we got a counter trend trade, the counter trend trade, which is just appearing over there and somewhere there now. So in the previous video analysis, we were expecting the this correction to happen and then price to bounce off. So those short-term trades almost already has happened. Yeah, within that, within this trade, we were expecting a counter trend trade to happen on the dollar index, and we had an update over there. All right, so we had an update over there. So after having a counter trend trade over there on the dollar index, we were expecting it to push more higher, simply back within the moving averages on that daily time frame. All right, so we were expecting it to go back within those daily moving averages and then drop. But right now we can see that the dollar already started to lose its value even ahead of the Fed rate decision. So dollar is struggling to push more higher and setting up for a breakout opportunity. All right, so what you are basically looking for, you're looking dollar to break down. Dollar is already a break-in. Yeah, if I'm gonna look at the Chinese yuan, all right, so Chinese yuan is making its move nicely against the dollar, or we can say that has already made its move because of China is trying to avert its slowdown. So we got a seller from there. Okay, we got a seller from there. This move came, then we had a quick aggressive move on the dollar Chinese yuan. Dollar went higher, okay, dropped, went higher. So then we got some good news came from China, which caused the dollar to go down. All right, so dollar index is simply dollar is just simply setting up for this drop move over there. So you are looking this drop to happen after the Fed rate decision. So if Fed is going to give some strength to the dollar, all right, like this. Okay, so still gonna be at that move. So I'm not anticipating that. So we're gonna look at the detailed analysis over there, how to tackle that trade, right? But make sure if this move gonna happen, yeah. So still we are looking it to go down for another very much similar like that like to happen here on the dollar index. So yeah, so no, let's hopefully you got the idea that what kind of move you are looking, the move you have already seen on the dollar against the Chinese yuan. All right, so the move going to be, you're looking breakout is already trying to happen. Yeah, so simply price to stay below these 4-hour moving averages. All right, during the Fed rate decision, price is already, breakout is already happening, but the risk is over there that the Fed can create a volatility and price can go sideways, slightly can push up and then drop. So that factor needs to keep in mind, that the volatility, the factor, volatility factor. Yeah, so breakout is just simply trying to happen. You are simply looking price to stay below those moving averages. All right, so below those areas, the price not to go higher. In case if Fed manage to push the dollar higher, okay, so same trade gonna be over there again, break like this. All right, so break down and continue to keep dragging more lower. So basically you look in that trade, all right, this trade, and in case if the sell-off after the Fed rate decision is going to be really aggressive, all right, and dollar going to continue keep falling very aggressively, because we are having a couple of more central bank rate decision. After that, the one is the ECB, and the other one is the Bank of Japan, and next week we are having Bank of England rate decision. So all these gonna be threat to the dollar. So all these rate decisions gonna be threat to the dollar. So first of all, you look in this 4-hour time frame and move, all right, and if the sell-off is going to be really aggressive, price to just keep pushing more lower. Again, there is a very good chance that the dollar can fall all the way up to these lows, right? Dollar, we were expecting buy over there at that time, so dollar can fall all the way up to these lows, all right. So yeah, so that's what you're looking. So first of all, you are planning a short-term 4-hour corrective move. All right, so if I'm going to draw slightly in a different way my trend lines, okay, so like this. So make sure you understand that there is still a possibility, because we are still having a volatility event, which going to be driven by the Fed. Okay, so keep that thing in mind. So I'm not really expecting that move to happen. All right, I'm not expecting, but make sure you are prepared for that move. So you are simply looking for price to hold those 4-hour moving averages and break down. So let me pull out another chart over there just to give you an idea that what kind of move you are looking on the dollar index. Yes, so pound has already begun that move. Pound, as in the previous video analysis, I said that the pound is setting up for a buy opportunity. Yeah, and there you can see that the pound dollar has already begun that move. So euro is still behind, and dollar index is still behind that. So you're looking for this move, the pound. Yeah, so pound to continue, and dollar index to also continue the move which we have already seen on the dollar Chinese yuan. Hopefully you got my point. Okay, thank you. We'll see you back again in another analysis. So you are looking for dollar index to just give us that move.